Good morning, ladies and gentlemen, and welcome to today's session. It is fantastic to have you here and to see that you are all joining us this morning for the second session on Audit Level 1. I am really excited to have you all here. Right, so let's get started. First of all, I have asked in the chat as well that you please download the material for today if you haven't yet done so. I've also provided the QR code on the slide, but of course, if you are working on your computer, the QR code is not necessarily going to be helpful. So the link is also in the chat. And then, yeah, maybe just to confirm then also the new download, so today's session live resources in that column on the success community, that only has slides. So it's basically the slides I'm using today you can download. But what you do need, if you want to follow and work with me through the exercises, is you will need the case study from the online or the e-learning course. But I'm hoping that most of you have already downloaded that whole delegates file from either from the e-learning or otherwise also from the success community. If I maybe just follow the link and show you where that is. So right at the top, if we go to the success community, to the GetAhead 2026, and we go either to learner resources or to the track schedule, then there for each of the different tracks, you will see that the material is loaded there. So we are on Audit Level 1 today, the session for today, 13 March, and then there you will get the slides for today, but then of course your material with the delegates file with the exercises and all the working papers are then either in your probe audit file or in your Audit International file. So your whole engagement file is in there with your caseware working papers and the Excel sheets that we're going to use also as working papers. They were also used partially in the e-learning. So you might have already started to complete them, and I'm just going to carry on with that today and just do another exercise or another transaction or two when we are working through the exercises. All right, so if you just want to follow and see what I'm doing, that's also perfectly fine. Maybe you don't have two screens, maybe you rather want to follow and do it afterwards as you wish, whatever you need, but the material is all on the success community for you. All right, so and that, of course, as I mentioned, is then including the slides as well. Right. Oh, goodness gracious me. So first of all delegates, as you know by now already, you've been muted, but you can use the chat function. Actually, I haven't looked this morning if the Q&A function is live, but it probably is live. I'm seeing it there. So looks like it's a bit slow, but the chat function definitely works. You can definitely just submit comments there. And then I will follow from there. Right. Good. I've mentioned before that the sessions are all recorded. You might even have seen some of the recordings. In fact, if I go to that success community, you'll see that we also, in some of the sessions, already have the recording. So the session from the previous one is not there yet, but you will see like some of the financial statements recordings are there, and then also the introduction ones. So they will also be added here as we go along, so that if you want to go watch them again, or if you've missed it, then you can always just catch up. All right, so we are also recording today's session so that, of course, if you want to go watch it again, you can do that. I like to especially have it on the one screen, pause, and then do the same thing on the other side. And of course, that's the best way to really learn, is to really also do it yourself. All right. Good. Then if we just carry on further, I really want you to engage. Remember, the whole purpose or the way that we've designed the course is that you do the bulk of the work or the learning through attending or working through the e-learning on the e-learning course, that you complete those recordings, that you work through the exercises. And then today's session, the main purpose is for you to engage, to have an opportunity to ask questions. So if there was something that didn't make sense or something that you want to just explore a little bit further, please feel free to use this opportunity to ask your questions and to clarify anything. And then also on the team site, you can, of course, use the reactions if you want to. And then we don't really have many polls this morning. We're mostly going to do exercises, but of course, there will also just be a poll question here or there. I am aware that some people can't necessarily submit their input. That's perfectly fine. If you can't submit your input on the poll, you can, again, just use the chat function to engage with us. All right, I've already told you about where to find the resources, but there's another slide for you, just as a reminder, or if you quickly want to grab that QR code. All right, so this QR code is for the material or for the resources. There is a QR code later on where we will do the survey after the course. All right. Good. So agenda for today. What are we doing today? In the first session, we first looked at the methodology. So we reminded ourselves of our methodologies, and we spoke about what was included in our methodologies. We also spoke about the inventory count. And so now it's already been 2 weeks since you've had your first inventory count attendances. I'm sure all of you had the opportunity to go and count some of your clients' inventory with their February year ends. If not one, probably 5 of those or so. I know that February year end weekend was very, very, very busy. All right, so we started off with what is in our firm's methodology, either auditing or either probe audit or audit international. And we also looked at doing the inventory count. So inventory count, we've parked that one, that's perfectly fine. We're moving on to other field work sections. Being a relatively inexperienced audit trainee or audit team member, then the rest of the level 1 purpose is really to focus on how to do the actual practical audit work in the different sections. Now, we're not going to cover all the sections, that's just not possible. But for the purpose of the course, we have then selected for today's session 3 topics, and in the next session, we are going to have another 2 topics. So for today, we're going to just have a look at cash and cash equivalents. Again, the e-learning has a lot of detail and a lot of explanations. I'm going to touch base on a few of those points, but definitely not going to repeat all of it. So if there are some things that you feel you'd still need to or want to go and refresh on, or if you haven't yet watched the recording, please do go and watch the recording of those sessions. So cash and cash equivalents, or bank if you want. Then operating expenses or general expenses or other expenses, however you want to mention it, but operating expenses is a section. And then employee cost or payroll, we have as a separate section. And you'll remember also from the recordings that because employee cost is processed in a totally different way to the way that we actually process normal other operating expenses. I mean, when you buy fuel for the delivery truck or any of those things, stationery, etc., the way that we process that is completely different. For payroll, we often have a separate section, separate software or package where we are processing every employee's salary, deductions, all those things. So just because that gets audited completely differently, we have then split that out in a separate section, separate session, and exercises. All right, and then of course we're going to look at what is left of the series or what comes up next. All right, and I've mentioned we are on this track, we are running this race of doing the field work, and we are going to touch on some of the topics, but I cannot by any means touch on all of the topics. So please do make sure that you watch the recordings if you haven't yet done so. And then, yeah, feel free to participate in the exercises that we're also going to do. Just to get an understanding and to have a feel for it, I want to just also ask, how far have you come with the material? And then specifically for this module. So module 2 is what we are working through today. And we are, then let me put it this way, the videos that are relevant to this session were video 3, whether it is in your Audit International or in the Probe Audit Methodology courses on the e-learning in audit level 1, but we had a video there for cash and cash equivalents, the combined theory and the exercises. We had a session for video 4 operating expenses, so the video is numbered. Video 5 was for employee cost, and then we had an extra question for video, an extra video for the probe audit methodology users, and that was with regards to the completion of the work program conclusion. There's a lot of questions in there, you would have seen that. So again, if you have even watched some of the videos, but you missed the one about the completion of the work program conclusions, please make sure that you do go and watch that. All right, for the Audit International, your conclusion is not that extensive, so that has been dealt with in the individual sessions, and that's why you then had one less video to watch. So I want to just get an indication, how far have you managed to come with the material? I'm launching the poll now. There we go. So Have you managed to complete it all? And your options there is I've completed everything I needed to for today. I'm making good progress. I'm not done yet, but I've started. And then the last option is I haven't started yet, but I'm getting there. And I'm hoping, that at least you've done something from the previous session, if you haven't necessarily managed to do everything from this session. Good. Let's go and have a look at the results coming through. As I've mentioned before, if you're not able to submit a response on the chat, on the poll itself, you can always use the chat. I see a lot of people are saying that I haven't started yet. So yes, thank you for your input there. I'm glad to hear that. I do hope that you've got the links to the e-learning, and then I hope that you're going to make a plan to go and get that also done. Hopefully also what you're going to see today is going to also, I almost want to say, inspire you to go and work through that and to see that there is actually a lot to learn. Thank you. I see a few people are saying they've done what they needed to, quite a few making good progress, so that's fantastic. I want to just give a bit more of an opportunity for everyone to participate and to submit their responses to see how far we are, not just the fast ones with fingers on the button, but give everyone an opportunity to just give us an indication of how far you've come. I can't see your response. Nothing's going to happen with the response other than just for me to know how far you've come. Great to see that a few of you have managed to complete everything. Some are making good progress. Right. Any more responses? We've only got about 31, 32 responses, and we've got 80 people on the video. So I'm guessing we should have a few more responses. Hi. Good. Thank you so much. Making good progress. Okay. I've inspired another 3 people to participate. Thank you so much. I appreciate it. Right. So that's good. Then we can carry on with the rest of the material. My slides keep disappearing, so let me just find them again. All right. So we're going to jump straight in, get going with the topics. There are a lot of topics. We've got 3 full topics to get through. So let's start then with cash and cash equivalents. And remember, our focus here is not so much on risk assessment or on planning, anything like that. Our focus here is to say a senior, another person in your team that's a little bit more experienced has done the risk assessment and the planning of the section for you. So in your caseware file even, you will see that when you open that work program, the section is already completely planned. Your work program has all the steps in there. So you don't even have to go and hide some of the steps or anything. Everything that's in there is already applicable. We found that it's best that we start with focus here in level 1 on the actual field work that I'm going to go do. So we're not so focused then on saying why accuracy or anything like that. That is not the focus for audit level 1. For audit level 1, we want to see, how do I complete the working paper? If my manager says, I have to audit payroll, where do I start? What are the important things to think about? How do I document that? All right. Audit level 2 is then where we will start to do the audit planning. So maybe some of you are attending both level 1 and level 2, then you'll know in level 2 we are working through the planning stage. But firstly, for level 1, we are first getting the ground, the foundation laid for just doing the field work. Right, so you'll either already have progressed to level 2 or you will then next year attend level 2, where we're going to look at how to plan the audit. Right, so for cash and cash equivalents then, we start off by saying, where do the information in the financial statements come from? And here we've got just a bit of a visual to say, well, when we are auditing the financial statements. We are auditing what is included in the financial statements. Yes, of course, the client has a trial balance, the client has a general ledger, all those things that is basically used to prepare the financial statements. But ultimately, we are auditing the financial statements. So we'll always start with what's in the financial statements. And so what happened before the financial statements? We mentioned there's a trial balance and there's other information. And now I've already run ahead to the GL, but let's just quickly stand still at the other for a moment. This afternoon, I'm also presenting to the audit level 3 about disclosure, and there we have a lot of focus on other. But it's important even for yourself, for doing any of the sections, to remember that not all information that is disclosed in the financials come from the general ledger or a sub-ledger or the trial balance. There is also other information that is somewhere else, maybe a lease agreement that will have information about what the commitments are for the lease agreement. There are minutes of meetings. There are valuation calculations done. That's not included in the GL or in a sub-ledger. Those will be in separate documents in Excel sheets or things like that. Often we refer to those as also information prepared by the entity, but I mean, it's stuff, it's documents, it's additional records that we also need to consider. So not everything is going to be in the sub-ledger or in the general ledger. All right, then further, what happened with the bank accounts before we got to the general ledger? Well, they recorded all the payments, all the receipts in the cash book. Right, so that's also one of the documents, I just want to say one of the tools we have in our toolbox that we can refer to, one of the pieces of information that we can use in getting information. Then, what did the client use to prepare the cash book? Well, they had to go and look at what happened in the bank, and the records that we have from the bank is the bank statement. So we will know what actually happened in the bank account, how much money came in and out, by looking at the bank statements that was prepared by the bank, and that maybe we downloaded it from the internet, but they came from the bank, and the client then used that to process the cash book. Whether they did it themselves or whether they actually just imported that through some tool, doesn't matter. The information in the cash book is prepared using the bank statements as a basis. And before the bank statements, well, there were actions taken. We had to pay someone, whether it's a salary or we had to pay a creditor for items that we purchased, whether we received money for a cash sale, so the client just paid by a card maybe, or whether it is a trade receivable, in other words, a customer that paid us at the end of the month, for example, on statement. So there was money coming in and out of the bank account because of transactions that happened. And those transactions were recorded, firstly through the cash book, and then ultimately information landed in the general ledger because of the money received, but also because of the other leg, the second part to those transactions. Money paid to settle a creditor, money received from a trade receivable, the salary paid, etc., etc. All right, so that is basically, if we look from the left to the right, that is the flow of the information that lands in the financial statements ultimately. But it is supported or underscored by the transactions that happened. Okay. All right, then next up, when we are auditing financial statements, we're always referring or considering, I like to think about it as a triangle or 3 parts to the financial reporting framework. So the first thing we do is we always ask ourselves, and I'm going to just quickly activate my laser pointer. Samu taught me a very nice other way for using the mouse, but even though I've got it up as a little link here, I forgot to activate that this morning. But let's start with the slides, and then they're using this pointer. Accounting framework is the framework that the client uses. So in our case, with wrap-up manufacturing that we are auditing, we are using IFRS, or the client rather is using IFRS for SME accounting standard. So we know that's the framework that they used in preparing the financial statements, and I'm assuming that's also the framework that they used to tell them how and what to process in the accounting records. But there are 3 steps in our considerations. The first question we need to ask ourselves is whether this accounting framework is appropriate. So the first thing we need to ask ourselves is, can the client actually use IFRS for SMEs accounting standards? So in other words, we have, so for example, the client may not be listed or actually trading their securities publicly. If they are, then they're not allowed to use IFRS for SMEs. And a few of the other examples, I think the one is also with regards to keeping assets in a fiduciary capacity, if I remember correctly. Of course, it must be general purpose financial statements, otherwise it can't be SME. So that's the first question we asked ourselves. So for us as junior trainees, we wouldn't have necessarily thought about that part, but that consideration was already done as part of the planning. And one of the first considerations in, will we take on this client, will we take on this audit? First question was, is it auditable? And that means, is it the right framework? So first question was, is the framework appropriate to the client? The second question then is whether the client's accounting policies are aligned or agree or is allowed, whether they are correct in terms of what the framework allows. So, for example, inventory must be at the lower of cost and net realizable value. Is that the client's accounting policy? Where do we find the client's accounting policies? Just give that a thought. Where will you find the client's accounting policies? Some clients might have like real policy documents or things like that, but normally clients won't have accounting policies in a book or somewhere that you're going to look for. Those accounting policies are most of the time, the place where you can go and find them is actually in last year's financials. Okay, I mean, it would be fantastic if we could have the client have like an official policy with showing their accounting policies, but I have never come across that in my dealings with clients, and those are mostly the smaller type of businesses. So when we look at last year's financials, we'll already have a good idea, especially if we also performed that audit, to know if the client's policies align with or are in agreement with IFRS for SME standards, with the standard and the requirements of the standard. All right, so firstly, is the client using an appropriate framework? Is IFRS for SMEs appropriate? Secondly, is the client's actual policies that they disclose in the financials, that they say that they use to prepare the financial statements, are those in line with what's allowed in IFRS for SMEs? So if the client says, no, my inventory is just always at cost, if they never consider what is net realizable value for inventory, then obviously they're not using an accounting policy in line with the framework. That's a problem for us. All right, that was step 2. Step 3 then is to say, well, are the transactions and the balances also actually recorded in terms of the framework? So there are also 2 parts to that. Firstly, the standard has rules around when can you recognize transactions, when can you recognize balances of assets and liabilities. So it's possible that the client might have actually recorded something, or maybe even removed something from the accounting records when they shouldn't have, when the rules said you're not allowed to do that yet, or you shouldn't record the new asset yet because you haven't actually taken over the risk and the rewards associated with it, or whatever the definition is. So that's the last step. Are the client, when they actually do the accounting, applying the rules in terms of the policies that we checked is in line with the IFRS for SME standards? And the same thing happens also with the disclosure. So where they, for example, need to disclose the PPE note or any of those things also, are they actually disclosing it in line with the requirements? Oh, sorry, I missed one step there. We're saying, are they recording, recognizing the items? But the second part to that is also saying, not just recognize it at the right time, but also as time goes on, we have initial measurement. What is the cost that you can, or the amount at which you can recognize it? And the second part to that is then subsequent measurement. So when I incur a cost, whether it is now an expense or whether I'm buying an asset, for example, or taking on a liability, when I incur that transaction or go through that transaction the first round, there is stuff that says when must you record it in your record, so recognition, but also there are rules that says what must you include in the number that goes into the accounting records. So that is initial recognition. When I buy the inventory, I may recognize the following as part of the cost of inventory. The rest must be expensed. But then secondly, subsequent measurement, and that's basically at financial year end. At financial year end, how should I then still recognize that item that was incurred during the year? If it is an expense, it will possibly not change because it's done and dusted, it's happened and it's gone. But if it is an asset or a liability at year end, do I need to revalue it if it's maybe in a foreign currency? We're talking cash and cash equivalents or the bank accounts. Maybe the client has a bank account in euros, right? And so they maybe do a lot of dealings with Europe, and they do a lot of imports or exports, or whatever it is. And then so they have a bank account with euros in it. Then at year end, subsequent measurement says they must go and translate that balance to rands, and there are specific rules as to which date they must use. All right, so that is where we then go to the subsequent measurement requirements and check that the client is correctly applying not just IFRS for SME overall, not just the accounting policies in line with that, but actually when they do the accounting itself, that they are using the correct ones. All right. Those are the 3 parts to making sure that that the client's accounting framework is correctly addressed and treated in the financials. All right, another topic that we talked about in the in the cash and cash equivalents, especially also then on the recording, was with regards to completeness testing. So we spent some time talking about confirmations and the fact that, well, you don't always need a confirmation. I mean, if you want to know if a bank account exists at year end, you simply go and look at the internet banking and see, yes, there was that account, and yes, this was the balance outstanding at the client's financial year end. Completeness testing is a little bit more tricky because it's not just about, does the client have all the transactions recorded in that bank account? Because oftentimes one of the easy ways is to really say, well, let's do a bank recon or test the client's bank recon. If the client's bank recon reconciles and correctly, and we see that it's the same in the cash book and the same in the bank statements and all those things, we'll look at that later on. But it's not just about that, because there we can say, well, all the transactions that happened in that bank account did actually get recorded. So completeness of that bank account's transactions. But how do we know there's not other bank accounts? So the completeness of the accounts and not just the transactions becomes a question. And now in the years gone by, like when I did my articles, which is, I heard someone this morning joking about someone that's been playing rugby since 1942. So when I did my training contract in 1942, that's about as old as I feel sometimes. Back in the days, before we had things like electronic confirmations, I mean, all of these things, back then, we always had a question for the bank to say, are there any other bank accounts with a client that we haven't listed here? Now, the legislation and everything has changed since then. And so the banks don't actually respond to that question anymore. In the past, they would say, no, there's no other bank accounts. But even if they said that, so in today's case study, we have, I think our client uses Nedbank. So let's say I ask Nedbank, are there any other bank accounts with this client? And they actually respond to me and say, no, these are all the ones that they have. There are other banks. There are lots of other banks out there. How do I know that there aren't any other missing accounts, bank accounts, that the client just hasn't accounted for in the system? So that's the question we're trying to address here. And so if you want to make maybe a note of this, there's a document. It's a South African audit practice standard. So it's SAABS, SAABS, SAABS 6. That is a document or a guidance document that helps us to say, right, so I can't confirm completeness through just doing a bank recon, for example. Oh, sorry, a bank recon or a bank confirmation. How else do I test completeness? And so these are basically the steps available to us. Inspecting the client's banking system. So yes, I can say, Mr. Client, go onto your bank so that I can check the bank accounts. There aren't any other bank accounts. Great. That's, again, getting us stuck at, in our example, Nedbank. Secondly, go and look at last year's list of bank accounts. If last year the client had 5 bank accounts and this year the client has 4, well, are they missing a bank account? Maybe. Maybe there is incomplete bank accounts. But secondly, also, maybe the client closed that account. It was maybe an investment account, or it was maybe a foreign account and they don't need it anymore. Whatever the reason is, they closed that account. Great. Now we go off and we say, client says they closed the account. No, we have to verify. We have to corroborate it. So we go and we look at the last bank statement to show there's all the money has left the account. And oftentimes, right at the bottom of that bank statement, there'll also be like a, I just want to say, official statement to say this account is now closed. Or there might be a letter from a bank, something like that. So don't just say, oh, last year 5, this year 5, happiness moving along, or last year 5, this year 4, client says they're closed. Okay, great stuff. Now we want to actually go and corroborate that that account has in fact been closed. Minutes of meetings, directors meetings, management meetings, things like that might give us an indication where not just necessarily closing an account, but maybe they are mentioning another bank account. Maybe they are mentioning that they need to actually, you know what, we're struggling to have, do business with just having this one account. Let's open up more bank accounts. So I know of a number of businesses, attorneys, even some of the investment companies will have a bank account at several of the banks. And then when you want to or need to deposit money into that legal practitioner's trust account, you'll say, at which bank are you? And he'll give you that bank's account information. Or if you want to invest your money in this investment company, they'll say, well, we've got 2 or 3 different investment accounts. You can choose where you want to deposit your money. So those could be the case. That we might say, listen, I'm struggling too much only having my bank account with X bank. Let's open another 1 or 2 to make it easier for clients. Or let's open up that foreign exchange account because we're finding this and this and this is necessary. Go. So those tips or clues or that information will come through the minutes of meeting. Right, then inter-account transfer testing. When we are looking at the bank account and we are testing big payments received or payments made from that bank account, we might see that it says inter-account transfer to the call account, which is maybe the account where we're going to put extra cash that we have to earn extra interest. We're earning more interest on that account than on our current account. And so then what we need to do from a testing perspective is to go and actually inspect that other account and make sure the money actually did go in there. Because if I really want to manipulate the numbers, what I could easily do is I can take the money, transfer it to another account, and just make the description to say to the call account. Let's say, and I'm now stuck on NetBank because that's what we've got with wrap up, but transfer to the NetBank call account. I make that my description in the bank statement. How would you know it didn't go there if you don't go check the call account? So then go and check the call account's bank statement, check the money came in there and says transfer from check account. All right, if it's not in the call account, it's somewhere else. The client has to go and show you proof of payment, what was the account that it was paid into, etc. And then indirectly through other testing. So let's say, for example, if I'm testing payments by debtors and I want to see the payment received for this debtor, then I will probably find it through there and say, I see the client's paid it. You've indicated on the statement, but I want to see the money come in the bank account. And I don't see it on the normal current account, so where is it? What I've also found is that sometimes clients start up as another, I want to say second, but it might be a third, type of business. So let's say, for example, the example in my head is now I'm an electrician and I have one business where, or the normal business is where I would normally just go and fix people's stuff. So the light switch breaks and I go and do that, or they want more plugs in the house and I go and fix that. Or when they build a new house, I set up all the electrical stuff. So that's like almost a service type of thing. But then also, and now in the whole theme of solar panels and all those things, maybe I'm the same electrician, but now I'm also starting to get more and more requests from clients to help them to install their solar panels and set up everything that's related to that. So then I might decide to say, no, actually, I want that money to go through another bank account because the client's going to pay a deposit in. It's a lot of money that comes in. It's actually not my money because I'm going to have to use that money to buy the solar panels or to buy the inverter or the whatever it is that I'm going to buy. So let's set up a separate bank account for the solar panel business. Okay, same business, just the different income stream, and I'll set up a separate bank account for that. So if I then learn when I'm auditing this client, and I understand that they now have a separate bank account or separate service, a new extra service that they're offering, it might be also a good indication then to say, okay, but that I clearly then see that that led to another bank account. Okay, it doesn't always happen, but that's an example. So where you might think, oh my goodness, how can a client not have all the bank accounts on? You will be amazed. I've audited a number of non-profit companies when I was doing my training contract many years ago. And it literally was just basically, let's say, a less competent accountant, bookkeeper, and she literally just honestly forgot to tell us that there's another bank account. And through indirectly testing other transactions, through inter-account transfer testing, through these things, we actually then found, but hang on, you actually never recorded this account. With double entry, all of that, they actually still got it. Well, I can't say got it right, but they actually achieved to not record the bank account. Unbelievable, but yes, that's what happened. So completeness testing may still be relevant if you identify that as either a risk that you record, so in other words, a relevant assertion to be going to test for the cash and cash equivalents. Now you have a list of ways to do that. Or if you have to have a bank account with a material balance and you have to select an assertion, if the completeness assertion is the most obvious one, then you now also have your, I just want to say, your shopping list of procedures to perform for that. Next up then is the cash book testing. Now, cash book testing is where we literally go and test the cash book. Remember now earlier when we looked at the flow of the information to get to the financial statements, after the bank statements, we have the cash book where the client records the transactions, the payments received, the money received, the payments made in the cash book, which is like the subledger, if you want, of the bank account. So we don't always test the cash book, the actual payments made and the money received. We don't always test those. But if you decide that is the most appropriate way to test that, then you have to do it to the source information. All right, so I'm also saying there in the slide, it may be required when it's not covered in other sections. So if you're already testing money received from trade receivables and money paid to trade payables and all these other sections, then you might already be sufficiently addressing that. So that's also why I'm saying it's not always tested, but sometimes we may need to. So to test that, you will go and select a sample or make a selection of the payments and the receipts in the bank statement or recorded in the cash book, because then from the cash book, we want to go and check that it was done. So I use the word bank statement now. Your source document is the cash book. You want to see what was recorded. Did it actually happen? Is it really there? So I'll go with from the cash book, and then I will go to the source, which is then, sorry, not the source. Then I will go to corroborate, which is then in the bank statements. All right, bank statements, check what the payment was for. Was it actually a sale? Was there a debtor recorded, etc.? So invoice or whatever the case is that actually underlies that payment received or payment made. All right, so we need to make sure that the documentation of what we have done covers everything to explain that we are comfortable that the cash book entry was correctly made. Right, so it's not just that we allocated to the correct trade receivable or trade debtor. It is also about the fact that the money was received, it was correctly recorded as a receipt and correctly allocated then as receipt from trade debtors or whatever the case is. Okay. All right, so then having now looked at a little bit of theory, I next want us to go and work in the case study file. So if you haven't opened it yet, you can open your caseware file now. I'm going to switch off the camera because I'm going to look at my second screen and then it's going to look a bit strange. So let me just switch off the camera. And then I am also going to go to the success community, not the success community, to my caseware file. And I am going to work in there. All right, so remember now I said that the wrap-up manufacturing as well as the supporting documents is all included in your delegates folder. So I've just reorganized mine slightly, not really reorganized, but in each of the sections, I've just basically split out what we've already used in the recording. So some of the documents from the cash and cash equivalents we've already used when we looked at and audited the other two bank accounts. So I've just moved them out so that we can focus on what we're going to use now in the session. All right. I think what is important, and also maybe from the cash book testing comment, is that we need to always make sure that our documentation is sufficient for another auditor to know what we did. That's now said very, very roughly. But I went to actually go and check what the standard says, because like I said, I said roughly, and we kind of, that's the ideal, that's the thought. But to really think about what is the requirement, I want to actually just read that to you from the standard. It says, the auditor must prepare audit documentation, that's what we're doing, work evidence, audit documentation, that is sufficient to enable an experienced auditor. In other words, it's not just anyone. I always think about my mom. I love her dearly, but she doesn't know about auditing or accounting. So not just my mom coming to check what's been done and reading my working paper. She's not going to understand what's on there. But an experienced auditor who has no previous connection to the audit itself. That person must be able to understand. What must I understand? Firstly, the nature, timing, and extent of the procedures that I performed. So what did I do? Which invoices did I look at? Did I look at invoices, or did I look at the cash book or payments, or what is it that I looked at? So the nature, the timing, and the extent of procedures performed. Then the results of the audit procedures performed, as well as the evidence that I obtained. So what did you do? What did you find? If you said go and look at the invoice and check that it was calculated correctly, to use an example, well, did you find that it was actually calculated correctly? Because if not, then you probably didn't get the evidence that you set out to obtain. And if you set out to obtain it, there was obviously a reason for it. So then maybe you don't have enough audit evidence if you find that you cannot, if you couldn't recalculate it. Okay, so we want the results of the audit procedures as well as the audit evidence obtained. And then we also need to have our documentation to explain to this experienced auditor any significant matters that arose during the audit, anything big that came up, also the conclusions reached on those significant matters. So how did we decide whether that is leading to a material misstatement or not a material misstatement, etc.? Then the last thing, I know this gets to a lot, but as you can see, you really need to have detailed documentation. The last point is, you also need documentation of the significant judgments made in reaching those conclusions. So let me just recap. We've said the nature, timing, and extent of procedures performed, the results of those procedures, and the evidence obtained. And then when we work towards significant matters, what significant matters actually arose during the audit, what was our conclusion on those significant matters, and what significant judgments did we make in getting to those conclusions. So what did we have to consider, and why did we decide this is okay or not okay, or it is misstated or not misstated, or whatever the case is. All right, you can see there's a lot of information that's on there, and that's also why we use our tick marks. Sometimes we need to include notes, etc., to really explain to another person what it is that we saw and found. All right, so we've got the folder then with the documentation we're going to look up. Now, next up, I want us to go to the section under the lead sheets and working papers, to go to the section cash and cash equivalents, and we are going to look at the bank section. Now, if you are using the Audit International methodology, you can still use the same Excel documents. I'm going to work in Excel documents, but because I want to also use some of the referencing and stuff, I'm going to work in the caseware file. So Audit International will work exactly the same. Your section number may change, and I'm not really going to look at the work program, but if you were to look at the work program, obviously your work program, the layout of the work program will be slightly differently, but our conclusion is going to be the same because we're going to audit the same bank account. All right, so in the section for cash and cash equivalents, there's a working paper that you would have worked through already in the recordings in the pre-course work. That it contains the bank reconciliations working paper. So that in the probe section is bank reconciliations working paper is 421. So we can open that one up. And then we are also going to just now shortly refer to some of the supporting documents. But for the moment, let's just have a look here. All right, so at the top of our document, we've got the working paper layout. The materiality, as we can see, is 800,000 Rand. And in terms of objectives for this working paper, we had risks that we want to achieve through addressing, or that we want to address through these procedures. Accuracy, valuation, allocation, that's the one. Assertion, rights and obligations, as well as existence and occurrence. So what do we really want to know? We want to know, is this bank account the client's? Is the money that they are showing, the value, is that the right value? Does the money actually exist, or they're just pretending they've got a bank account with this money? Obviously not, but we want to confirm. And then rights and obligations is always an interesting one. So rights and obligations is saying, is there anybody else that has first right to this money? Because we're talking assets. So the way I always like to think about rights and obligations is to say, if the business had to go under today, this is now money, cash, so we don't have to sell anything, but who would get the money? Who would have the first dips to get this money? If the bank account was given up as security for something else, let's say for a loan or for the inventory or the trade receivables or whatever the case is, if that was given up as security, then the business itself, in our case, wrap-up manufacturing, wouldn't have first dips to that money. They would only be able to get the money that's left over after the other guy got what he needed to. So let's say, for example, there was a debtor, okay? And the debtor was a bit dodgy or something, and I gave up. No, let's not say the debtor, because that's now a very difficult example. Let's say I wanted to get a creditor account, a supplier account with credit at one of my suppliers. And my supplier said, I'm not going to just give you the account. Just now you're not going to pay me. So for the first year, or whatever the case may be, I'm going to ask you for surety, for security. What am I going to do if you come back and tell me, oops, sorry, I can't pay my account? So I want some surety. And the business said, fine, no problem. I'm going to give you this one bank account that I've got. I'm going to give you that as security. They literally sign over the rights to that account and the money in there. There's sometimes guarantees that the bank might even give. Then the bank knows not to give out the money to anyone else other than that person who's been guaranteed to. So what will we see there? In those cases then, if that business had to go under today, the question I ask myself, what would happen with that money? Well, Wrap Up Manufacturing can't take it for themselves because it's not theirs. They've given it up as security to the supplier. So if the business had to go under today, well, then the business probably wouldn't be able to pay the supplier. And the supplier will come and say, okay, so please can I have the money from that bank account because it's been given up as security for my outstanding balance. And that information needs to be disclosed in the financial statements. And that's why we audit rights and obligations when we are busy with the field work, because we need to know that if there are those scenarios, that they are correctly disclosed in the financials so that no other person looks at the financials and thinks, oh, I see there's a nice cool account with lots of money in here. Yes, I don't mind giving them an overdraft on their bank account because on their current account, because I can just get that money back from there. But in fact, it isn't actually available for them to claim because it's already been given as security. Right, so that's rights and obligations. So we want to know whether there are any of those type of scenarios, and that we get from the bank statement, from letters from the bank, from a security letter, things like that. Okay, but that's that part. Then in the work that we've done with the sample size, we didn't do a sample, so that was fine. Oh, sorry, the risk of material statement for the assertions was it was medium for AVA. We had a low rights and obligations and a low existence and occurrence. And if you wanted to know where I got that from, that was from, let me just, don't know if you've seen this trick yet, because this is a general font, not font, field type, it actually takes away that last zero. So if I just type in like a little, I don't know what you call that thing, like an accent or something, then it actually keeps the 60 there. The other option could also have been to just change it to numbers, because I actually do have the dot something something. It can almost just look like 11 Rand 60, but I prefer to actually have it rather as general and then just use that little stripy thingy accent there. We didn't select a sample of bank accounts. This client only has 3 bank accounts, so we're just going to do all of them. And in terms of selection, that is 100% selection. Fine. In terms of the sampling method, I said just now we didn't do a sample, we just selected all of them, so there's no sampling method. And the audit work program where we're going to do find the steps here. Sorry, I should have actually done this from in preparation already, because we would have started with that in the recording. That's all in there. The step that we are performing is step 3. I'm not going to go to the work program now because we started with that in the recording as well. Okay, so what you will see that you've done from the recording already, or when you go and do the recording, we'd already audited the current account as well as the Nedbank call account. I'm not going to go look at those again. They are there. And then also, if we just look at the caseware file, you'll see as part of that work that we did in preparation or in the e-learning, we also imported the Nedbank call account and the current account statements, right? So they are not in your, I just want to say, raw file that you imported. That is part of our evidence that's imported. We're going to go and look at the third bank account. Now, the third bank account, if we just go to the lead schedule, the cash count, not the cash count work program, the cash and cash equivalents lead schedule 420. What we will find in there is that, okay, there's petty cash, which is really clearly trivial. Then we had the current account and we had the Nedbank call account. But last year we had this other account that had 556,000 in there. It's called the overdraft facility, and it doesn't have a balance this year. That looks a bit strange, huh? So what happened to it? Has it been closed? Well, I can tell you now it hasn't been closed. And if we go and we look at the accounts in the lead schedules, we will see that we cash the positive balances of 420. When we go to the current liabilities, 620 is where the bank overdrafted. I mean, the lead schedule says overdraft facility. Let me show you the overdraft facility. So let's go see if it is under 620, the lead schedule under 620, to go to see if that bank account balance is in there. And there you go. It's there. So it's basically gone from a positive balance last year to a negative balance this year. As you can see, a 3 million rand overdraft. My goodness. Okay. So this is then also, again, the net bank overdraft facility. So still the same bank, but of course, another account, another facility. And this is the account that we now need to go and check the bank reconciliation for, because that's what we do on the working paper. If we look at the Excel document, we are actually taking the balance from the bank reconciliation, agreeing it to the lead schedule, taking the information from the client's recon, and basically recalculating and checking that it was done correctly. All right, so I'm going to split my screen, seeing that there's a number of you that haven't yet started with the work or haven't done it yet. Maybe now's also a good time to just show you how to split the screen. So if I don't have two screens, or like I'm already using two screens, but I'm only sharing one screen, I want you to be able to see both what's in the Excel as well as otherwise. So let's say, for example, I'm going to open up the client's bank recon now. So there in my documentation that the client's given me, I've got the client prepared bank recons. But now all of this is on one screen, and I want to be able to actually see what's happening in the bank recon as well as on the Excel. So what I'm going to do now is I'm going to actually split my screen in two. So the way I do that in using my keyboard, on my keyboard, there's what we call the Windows button. So it's literally, it's a button on the bottom line of your keyboard, on the left-hand side, more or less. Depending on your keyboard, it might be the second or third or so button. 4 blocks on there that looks like the Windows button. Or like the Windows logo. And if I click that and I use my arrow keys, I can quickly and easily split my screen. You can split it into multiple options, but I'm just going to split it one document to the left, one document to the right. That's complex enough for today. So I will use my Windows arrow. I will use my Windows button and use the right arrow to move this document that I'm currently seeing to the right. If I insert or click the Windows button and I click right, you can see that document move to the right. Now my computer's saying, okay, so that's what you want on the right-hand side. What do you want on the left-hand side? And I'm going to go, oh, I want to use the Excel document. I want my Excel working paper to be on the left-hand side. All right. I've just minimized the source document folder. All right, and there we are. Now we can work on the left-hand side and see what we need to on the right-hand side. Good. So the accounts that we've audited before, that is your current account that was on the line 29, and the call accounts also already been audited. So what we are left with now is the net bank. What do they call it? They call it the discounting facility. We've got it down as the overdraft facility. All right. So we'll have to go and ask the client and say, listen, we weren't aware of a discounting facility. We were aware of an overdraft. Please, can you give us more information about the discounting facility and also give us the reconciliation for the overdraft? And then the client says, oh, sorry, I made a mistake. Actually, this is not the discounting facility. This is, in fact, the overdraft. See, you can see there that the balance of 3179 actually agrees to the bank statement. Go and have a look at it, and so forth and so forth. And so when we look at the bank statement just now, we're going to see it's exactly the same thing. All right, so that was just a client error. I'm almost wanting to just do a little cross out and basically just indicate to you that it's almost something. Goody. No, I can't even do that. Okay, I wanted to make the line very, very thin. But okay, so we know at least then that the discounting facility is just the wrong word. Okay, so that's the overdraft. Now there's the bank reconciliation. What did the client do? So in the recording, again, we talk a lot about recons, and you'll also remember that in the first session, we also did the reconciliation between the fixed assets register and the client's records in the GL, and we also did another recon. I forgot now what the other recon was. It was some investment statement, yes. So that's the same thing that the client has already done. We are now auditing that the client did it correctly to prove the balance. Right. So the balance, according to their cash book, their accounting records, is 3,179, but their bank statement at the end of their financial year, 30 April, is 3,166. All right, so on our working paper, we start off with the information for the bank account itself. Okay, now I realize we're going to actually have to go and get the statement also. Right, so we are going to have to flip around a little bit. There's my overdraft facility bank statement. I'm going to make it a little bit bigger so that we can see a little bit better. So here we've got this bank statement now that the client has prepared, or given us rather. So this bank statement is going to be part of my evidence. So I'm not just going to want to just copy information to my Excel like we can do with a client's bank recon. We're not going to place this bank recon on the file, but I do want to actually place the net bank overdraft facility on the client's on my audit file so that we can use that later on. So how do we do that? Some of you might still remember from the recording again. So if I go to my document manager, yeah, I see my document manager and I see the section. Let's go to the section. There we go. Right. So then I'm going to copy this or insert this statement, this bank statement, into the caseware file. This is now how I'm going to put a PDF into my working paper file. So I'm going to literally drag it. And if you select it and you drag it and you hold it, you can actually choose exactly where it needs to go. So I'm going to move this net bank statement to below the other two, and you'll see it will then automatically be renumbered to 424. Okay, let's just recap what are the secrets about adding a PDF document. With a PDF document, I have the option to either just plop it in there, nothing changes, or I can actually change it and say, I want to use this as a working paper. Okay, that's going to be in the image viewer. So first thing we want to do is, right, the number's obviously not a duplicate number. It would have automatically selected a decent number. But next up, I don't actually want this 4 thing in here because, yeah, we've got the 4 in the number because that's how the client maybe gave it to us or something, but I don't want that as part of my working paper reference. So if I right click, I can go to the properties. And that's probably the first thing I'm going to go change. It's 44 is fine for a number. I want to remove that first thing. I just want the name to say Netbank Overdraft Facility Statement. That's the document name. And then type, it's an image document because it's a PDF. That is an image. The location you might want to also change. So I like to actually change it to the reference of the document and then the name of the document. This is really so that if I need to go and find this in the folder where my caseware file is, then I can find this document easily. It's probably not that relevant anymore, but in years gone by, we often used to have lots of reconciliation, synchronization of conflicts and things like that. And then sometimes your file corrupted and you need to go find the document. So it's still from those days that I have learned to change the location number to something I can always find again, very, very closely linked to what the document is. All right, the important part for us here is that in the viewer, because this is an image, you can choose to have it an external viewer document. Then it's just like basically like a dead document that you have in your file. Or you can make it as part of a working paper, and that is then an internal image viewer document. I want the headers because I want this to be like a working paper. So I'm going to choose the one that doesn't say no headers. Now I've got an internal image viewer. This is now another working paper in my file. All right, so now I've added the document. Yes, I want to rename it, and that is my document. Good. So now if we open this PDF document, you can see this is a totally different view to what I had just in my Adobe Reader. It's now actually a working paper. You can see it's added the client name at the top, all those things. Yes, it still shows all the other information, but it has now become part of my engagement file. So I'm going to close the external PDF. We will still keep the client bank recon open, but now I actually have a working paper here. Right. So that's that part then. And then the other one that we wanted to look at was the Excel. Okay, so there's my Excel still. If I want to maybe now move that to the right, then I've also got that split up with my windows and my arrow buttons. Good. So let's see what we are finding on this working paper, which was our bank statement, or is the client's bank statement. So firstly, remember we talked about rights and obligations. We want to make sure that this is in fact the money or the overdraft of Wrap-Up Manufacturing. So we can see the account description, account number. It's Wrap-Up Manufacturing Pty Limited, which is our client, and the account number talking about an overdraft. What I will do is I'll go to the top where I can make annotations, and I'll actually select the highlight just to also make sure that anybody else can also confirm and see easily that that is in fact what the account is in the name of Wrap-Up Manufacturing. So we've already said it's a working paper for Wrap-Up Manufacturing. You can always add an annotation there to say, so just say account is in the, oh goodness, in the name of the business, something like that, if you want to confirm your rights and obligations. Okay, that's not the biggest concern for me today, but we do at least check and we confirm that that is the right thing. Next, then, we want to make sure what is the, now I should also probably just add the account reference and stuff in there. So from our lead schedule, we go to the bank overdraft, we can see the account number according to the accounting records is 5410 000, and the account is called in the accounting records Net Bank Overdraft Facility. Okay, what is the balance per the cash book? Well, we can see it here on the lead schedule, but we can also see it on the client's reconciliation. So let me just type this in here as well, then we can see. So it's a minus because it's an overdraft, 3179265 and 38 cents. That I can agree to the lead schedule because I'm literally on the lead schedule, but we're going to check it to the client's records just now. So the tick mark here, in my legend, I said no exceptions noted. So we will just say we have agreed it. And there you can also see that we said the negatives are on the overdraft lead schedule. Right, let's just double check this to the client's cash book. Where is that now? On the client's reconciliation, sorry. So on the reconciliation, per the cash book, they have 3179265 and 38 cents. You would ideally want to also go and check this in the client's cash book. I didn't now give you the client's cash book, but you would want to go and also just check that that is in fact the balance in the cash book. The fact that our trial balance or lead schedule shows that also gives me an indication that that is the case. I'm not going to now go to the GL account, but you can, that's also a way to check that or to do that. All right. So we've got the account number, we've got the balance, and we've agreed to the lead schedule. Next up, then, we want to go and see if we go to our rest of our worksheet. We want to go and see what was the balance in the bank statement. So yes, this is from the reconciliation. You can also see it says get it from the reconciliation, but we are going to agree it to the bank statement. So what did they have? So here we have per the bank statement, and the balance that they've got there is, we can see there, again, it's a negative 3166233.52, and that's the balance. Now, important, you can probably see this yourself, but you can also clearly see that there's a difference. And it's actually not a surprise because we can also clearly see there are two changes, or there are two things that make up the difference between the two. So it just says interest and fees for April 2023. So what is this about? Let's now go to, I'm going to just close that for a moment and go to the facility statement, which is now part of our working papers, and go and see what is the actual balance in the bank statement. Is it also the same as that 3166? Well, so here now we can, I'm just going to use the highlight again because that might be easiest for us. But here we've got on the balance, on the 30th of April, which is our year end, the balance brought forward is then exactly that same, 3166233.52. So that's the balance. And in fact, you can now include a reference to the working paper here to say that's where it is. Okay. This working paper's reference is, and now I've forgotten, I don't want to be on the bank over, no, sorry, document manager, the working paper number, this bank reconciliations working paper is 421. So in the, let me just close these slides because that is now going to confuse me every time when I see the slides. There we go. All right. So the working paper, this working paper reference, this is not the best way to confirm it, but we can see it's numbered 421. The best way to confirm what the number is, because I might have copied this from another working paper and forgot to update this like just dead number. Okay, it's not a live linked number, but what I can definitely see the number is 421, where it is in my document manager. So I'm going to now go and reference from the bank facility overdraft, which is document 424, I'm going to go and reference that balance brought forward to the working paper. So the way I can do that is to use this, include a hyperlink or a reference document. We know it's 424, so I can literally scroll to 424. Sorry, 424 is the overdraft, 421. That's the link that I want to include. And as soon as I do that, well, it happens to just go anywhere, but we can then just move it next to and say that's where it is. Oh, I see. I've now linked it to my, there we go. The highlight is still there, but the working paper reference is now not attached to it. I could also just move it there. So where will we find 31662233? Well, it is also here on the bank reconciliation working paper. Remember, we talk about cross-reference. So I've now gone from the bank statement to my working paper, but now I also need to include in the working paper the reference to the bank statement. The bank statement number, you might not be able to see it. There it is. Top right corner, 424. That's there. But also, if we look in the document manager, we can see the overdraft facility is called 424. So here, again, I can just add 424, which is really just typing. And now you can see the number format is wrong, yeah. But anyway, we can just remove the zeros to include that there. If you are using connector or things like that, you might also even be able to just include a hyperlink here. But that is pretty much good enough for the Excel working paper. Okay, so now what we've done is we've linked the balances, we've checked the balances, but we are still sitting with this difference. I'm actually just going to make it slightly change the size. Let's just see what is making up the difference that we can see. So we've got here to get to the 3179. So if I maybe go and highlight that one also for you, this is the one that the client used to reconcile to the cash book. So what it makes up the difference? Well, it's really these three numbers. So it's an overdraft fee, which is the fee for the fact that we have the access to the overdraft, the service fee, might be just other bank charges, and then interest that we had to pay on the overdraft of 3,900 Rand. So those are the three amounts that makes up the difference. Then we can go and check if this is correct. Now, I'm just going to quickly use the calculator, just activate the calculator on my screen. So I literally on my keyboard clicked calculator. You can use Excel, anything like that as well. Maybe I'll use Excel because then I can also see if I make a mistake. But any calculator, anything like that works well. So I'm just going to quickly use this part here. I'll remember to delete it again, but then we can double check that the amounts work correctly. 1183.5, 7890, 3958, and 36 cents. Okay, let's make all the, not worry about the font so much. You know, you can go and use your auto sum function. And that will automatically say, okay, those are the three numbers you want to summarize or sum, and that's the value. 13031 and 86 cents. Now let's go and see what's the difference between these two values. If I take the one minus the other, that is exactly the difference that we have between the cash book, what's recorded in the client's accounting records, and the bank statement. So what should have happened here? Should the client have accounted for that 13,000 Rand only after the year end? In other words, is our cash book correct? Or is the bank statement, is it, hang on, the client has already accounted for these three things. Have they done that correctly? In other words, they've increased the money that we owe the bank at year end for those three, or is the bank statement the more correct one? Because look at this, these numbers all show that the payments only, or the money only went off on the 1st of May? Are they 2023 financial year end expenses, or are they only actually relating to May 2023? Well, overdraft fee, service fee, those things are charged for what's happened in April, and the interest, surely that interest also accrued in April. So the bank, in fact, the bank's reconciliation, sorry, the cash book, what the client has accounted for in the bank is in fact the, let's say, the more correct one, because yes, those expenses were in fact incurred. So the fact that the bank statement balance didn't include them, that's not a problem. The client has correctly accounted for them. So now we just need to make our working paper show that we have thought about this. We know there's a difference between the two amounts. How did the client treat it in their reconciliation? Sorry, let's see what they did in their bank reconciliation. They said that those are the reconciling items. The bank statement is not so ideally right, but our cash book is there, and that's the explaining difference. So they've obviously accounted for it in the cash book already. Is that correct? We said yes, we're happy with that. So now in the Excel audit documentation, remember we said we need to have our documentation sufficiently detailed to any experienced auditor to see what nature, time, and extent of procedures we performed, etc., etc., etc. So let's do that. So first of all, in terms of the description, what does this 13,000 relate to? It relates to interest and fees for April 2023. So the fact that it is recorded in the cash book is correct, of course, we see, because that is the financial period. So now we are going to, and just so that you don't have to sit here and see how I make typing errors and spend time typing, I've typed up the notes for us so that I can just insert it here. So we can then document here to say we've agreed the amounts to the bank statement, that 13,000 Rand. The transactions are dated the 1st of May 2023 on the bank statement, but these fees are appropriately raised as they do relate to the use of the facility during the financial year, specifically the period of April 2023. So that is our audit evidence documenting our considerations. If you want to, I wouldn't necessarily say this was a significant matter, but we've applied our minds to it and we've said, is this correctly accounted for in the client's accounting records? Yes or no? All right. Cross-cast, because I know that the balance in the bank statement, the balance in the cash book and the amount of the interest and the fees, that will get to 3,166. We've tested the calculations there. Then just really our audit evidence. Have we agreed the balance to the bank statement? Yes, we have. How do I make these little tick marks? That's, of course, an A, literally just a small A, but I'm using a font called Webdings, and that then shows the tick mark. Okay, so just in case you missed that. Then the bank statement is in the name of the company. We check that. We highlighted it in yellow. So yes, that's there. Oh, goodness, A. And then the statement is reflected as 13,000. Okay, so we've done what we needed to in that table. I do still have a comment here, and that is specifically with regards to the fact that there are two mistakes here. Let's just quickly see. So the just remind ourselves, the 151,000, yes, of course, that's the two. So the 151,000, that one needs to be fixed because these are the amounts where the client only processed them on the bank statement through, well, they processed through to the 3rd of April, and they should not have processed, they should therefore not have processed into the accounting report. So that amount should actually be coming through. What happened here, practically speaking? We paid the creditors, but the money only went through the bank after year end. Okay, so we've shown the cash book is less. We've shown the creditors less, but actually the money hasn't gone through yet. So we need to actually, technically speaking, go and restate those. And so that is a mistake. But it's 150,000, 151,000. You'll remember our materiality was 800,000. So it's not really big enough for us to force the client to fix it. We'll put it on our schedule of order differences, and then we'll ask the client to fix it. But if the client doesn't want to fix it, it probably won't materially mistake the financial statements. But it is clearly more than our clearly trivial amount. It is something we need to keep a record of to consider with all the other audit adjustments. So then we're going to process a journal entry here within one. Okay, in one, you can either list it, I want to say probably there around 172, or even add it here as a note there if you want to just show and see how you're going to treat that. But what's important is that we need to record here what the journal entry is, what it relates to, and then it will get processed in your accounting records. Now, I almost want to say the good news is that in your document manager, in both your files, they're already recorded. So if we go to adjusting entries, that entry is already processed here. Creditors payments processed, right? So that's already processed there. And we also, so those ones are already there, not to worry. All right. So, sorry, I'm seeing now that I incorrectly linked it there. It shouldn't have been there. It should have been for the other 7699, the other problem. Okay, but let's just quickly add that journal entry there. So creditors payments should be reversed. This is now where we then consider overall for the bank accounts whether they are materially misstated, and we say, well, this is the results we found. What are we going to do about them now? So creditors payments should be reversed and interest should have been capitalized. And our journal entry is what's going to follow. So there we've got debit, and I'm just going to go to another account to show, or another column to show the account numbers, 8450, and it's 000, or the bank account's current account. And the debit there is the same amount, 151,370.59. And then I'm going to credit. What is the account I'm going to credit? Is accounts payable. Now, I know it's account 9,000, but let me go and show you where it comes from. So non-current liabilities, trade payables. If I go there to my trade payables, the account is 9,000. Okay, 9,000 000. Okay, so 9,000, and that, of course, we see these accounts payable. And now here we want to obviously just make the amount minus. So you could also just do that to save some time. So all I did is I just said equals minus the other amount, and that then made it a negative. The second transaction that we need to, what I say, do something about is the net bank call account. And that one, oh, hang on, I forgot what the number is. 8440 000. And there, the mistake was 7699 and 84 cents. And the credit here relates to interest received. So that is on my 700 lead schedule. Okay, close that lead schedule. If I go to the income, operating expenses, it's not under operating expenses. It will be under investment income. That's where the interest received will be. And there we can see the interest received account is 2750. All right. So the interest received 2750 account, and that's interest received. And again, we have a minus, or the credit is of course a negative because we have it all in one account. All right. So that one bank that we did look at, that was fine. The balance is correctly done. The overall, the difference is that. Oh, and then we looked at the journal entry, but what was that reference here? Let's just see what the reference is so that another person doesn't have to go and wonder which one it is. So that's the journal, and you can see the reference. Okay, that's the working paper reference. But there we go. The current entry is called HM1. All right, same journal that we had just now. We've got the debit and credits. That's why there's nothing in zeros. There's the explanation or the description. But the journal entry that we want to link here is to say, refer to journal HM1. Your firm have different ways to actually link or reference these journals. In our firm, we used the team members' initials, which is Helen Miller in our case, and that was the first journal that she processed. Right, good. So that was then the bank account work that we did. We've then audited the complete bank reconciliation. Let me just get this thing to be bigger. My Teams things are stopping me there. So we've done the work, step 3, and we could go and sign off the work program for this information. Okay. So that working paper, I will save it in my caseware file because it doesn't save by itself. And the overdraft facility there, we had referenced the amount. You could even include that reference if you wanted to also include another hyperlink, but this is then part of my working papers. The bank overdraft, that's just the lead schedule, and the cash and cash equivalents lead schedule as well that we opened earlier. All right, that's auditing the bank section then. All right. It is now 10:20 already. Can you believe it? So I'm going to give us some time now to quickly take a comfort break. So 10 minutes. Take a comfort break, stretch your legs, do what you need to. And then so it's 21 minutes now already. Let's say 10:32 if you want. In about 10 minutes, we will be back then to continue. And the next topic we're going to deal with is operating expenses. So enjoy your comfort break. I'll also add in the chat that we're going to start at 10:32. Enjoy your comfort break, stretch your legs, and then see you back soon. Right, ladies and gentlemen, I hope you had a good break. I still have 2 sips of my coffee left, so I might just be taking a sip here and there in the middle of the session, but at least we had our legs stretched. Good, so we are busy with, now I need to just find my presentation because I see when I put up the slide for the tea break, I put up this afternoon session, so we almost changed courses, but we are back on track. So in auditing operating expenses, we start again looking at the same scenario. So we look at what gets into the financial statements. Well, we've got a disclosure on operating expenses. We might have a few specific expenses disclosed, but they also come from somewhere. So again, the information, the financials come from the trial balance, come from other information. We mentioned a lease agreement earlier on, maybe to show what disclosure needs to be in the financials for the upcoming or the committed lease agreements. Maybe there's, well, again, expenses, some other information that needs to be shown or reflected for those expenses. General ledger information, then usually we don't have a sub-ledger because it's different types of expenses. So from that general ledger, we often have supplier invoices rather, that shows or that supports or that corroborates the individual expenses. And of course, a supplier invoice is always linked to some action, purchasing of items, stationery, a phone call made for the telephone expense, etc. All right, and then again, while we are auditing, a reminder, we are checking that we know the client's using IFRS for SME. We've said that's fine. We are now, when we are auditing, we're not just checking is the amount the same as the invoice. We are also checking that the client has, in fact, accounted for the expenses, which is what we're auditing, in line with the accounting policy, which must be in line with the requirement, or the, I was going to say allowable way, but the requirements of the standard. Right. So that is the main thing that we want to focus on when we are then auditing operating expenses. So that's really, almost want to say, all we want to do in terms of overall consideration of the theory. We want to then go back to the caseware file. And again, I'm going to switch off my camera and look at the caseware file, and then we're going to go and audit that. So before, we were busy with a bank or the cash and cash equivalent section. That's non-current assets, non-current liabilities. All those things can now be closed, because we're going to go to expenses, and I closed my operating expenses, I think. Let me just go and find it again. Can you now believe? There we go, 750. Right, so that's the section that we are going to be working in, and the operating expenses working paper 751. All right, so we'll work on employee costs later on, but for now, first just 751. So what you also need to remember, if I show you my documentation or the support that we have as part of the information. So what we had already done is we had already reconciled in the pre-course work, we had already reconciled the material, the general ledger account, all the little accounts making up the operating expenses. We've already reconciled that to the general ledger from the lead schedule. So that's been done. Please bear that in mind, because now we know that whatever we're going to be working on, when we are selecting invoices, etc., we know which accounts make up the operating expenses. So when we had to go and select items, we knew they were where they came from. We knew that we were working with, I want to say, real operating expenses. In other words, if I'm actually just quickly going to go back to the slide. So we know that when we are working on an invoice, that invoice actually came from the general ledger that we were working on. Right, so we know there is that link. We're not guessing, we're not hoping, we know that for a fact. All right, so the invoices that were already used in e-learning, I've just moved them out, or the other information. So when we go to invoices, we are still left in with 2 invoices. And I want us in the Excel document, so let me just quickly go open up our Excel working paper, 751. I want us to work on that one motor oil invoice. All right, so here's our working paper. We are going to enable the content. So I'm going to just flip that like that. And okay, we'll open the invoice file just now, but for now, work like that. So again, I've split the screen, and we're going to look at the invoice for motor vehicle oil. There's the invoice, and that is number 3. That's linked there. So let's just open everything, and then we'll look at what we have in the document. So again, the working paper, we started off, we said the materiality is 800,000. That is still our materiality for wrap up. Our source was the general ledger. That's where we selected the items from after we had reconciled the general ledger. And that's also what we are just explaining here, where the step says document how the completeness and the accuracy of the population from which you selected the items were verified. So whenever we are using information prepared by the entity, by the client, we need to verify, make sure that it is complete and accurate before we just go and make our selections. So we've done that through the reconciliation. There's a whole explanation there of everything we've done. There's the reconciliation showing what has been tested elsewhere, the depreciation and so forth. Then the senior went to go and select a sample of 6 items for us. That's not our focus, how to select them today. We did that through random number generator. We've linked the steps from the work program, and then we went to go and do some work on those invoices. In the recording, we did work on 4 of the invoices. The one I want us to look at is number 3. as you would have probably have guessed from the invoice number being number 3, we have a fabulous client that really spoiled us. They numbered the invoices for us. You don't get that very often. So if you do happen to get them, be very grateful. All right, then motor vehicle, petrol and oil is the account name from the general ledger. The account number is there, and then the date when that invoice was done. So the description said that's the supplier number invoice, and we've got the amount. Now we need to go and audit this amount. So step 6 says we need to go and just check what the type of supporting document is, what is the actual date, and who's the supplier. So let's go look at the invoice. Invoice is on the right hand side. What is the type of document? It is a tax invoice, but it's from a supplier. So we will go and say, well, this is also a supplier invoice, thankfully, because it's already there. It just copied it over for me quickly and easily. The date of the invoice, we can see on the invoice itself, that is 28/04/23. And okay, my date format is slightly different, but we don't worry, it's the same thing. What is the supplier name? We can see there, Good Morning Oil Pty Limited. So we'll say that is Good Morning Oil Pty Limited. The document number, that's their invoice. So that is, of course, that G2187, G2187. Why are we typing all of this info? Why do we need this information on our working paper? It's not because I want to see if you can type quickly or fast or type the right number. I mean, that's not the point. The point is, I keep going back to what we spoke about earlier to say our audit documentation needs to be sufficiently detailed to enable an experienced auditor to understand. And now, yeah, this is the thing. The nature, timing, and extent of procedures. So which procedures did you actually test? And for that person to be able to understand what you've done, and basically they need to be able to go select the same invoice and get to the same answer. And for them to be able to select the same invoice, they need to know which invoice you looked at. All right. And to see, what did you do? Did you confirm the document number? Did you confirm the date was the correct date within the financial year, etc.? So that's why we need all of that information. Right. Just in case you were thinking this woman is now really doing something unnecessary, it is necessary for us to have this information on the record. All right, now we get to the amount. So the amount excluding VAT, let me just maybe make this invoice slightly smaller so that we can see all the amounts, all the numbers on the same screen. So the amount excluding VAT is 61,000. Then there's the VAT, and then total of 62,000. Now let's just quickly look at what's happening on our invoice. So we have 2 line items. The first one is diesel, 2,800 litre of diesel. There's a rand value per litre, but there's no VAT on the diesel. And then we've got the total. So we'll obviously have to recalculate the total, but that's something else. And then we've got the oil, and there is VAT. Yes, there is VAT on the oil. So the question, just note the VAT is per unit. So if you're already checking the recalculations, that's 107 Rand per 5 litre can of oil. So there's 4 of those cans. So the 4 times 107 is what's going to get you 428. Okay, I know where we are going. So yes. The first question we have to ask ourselves is it appropriate that there's no VAT on the diesel? And the answer is yes, because there is no VAT charged on diesel. Right, so yes, that's appropriate. We bought the diesel. We are not charged VAT for that, so that's fine. Then we'll have to go and recalculate all of these numbers. Now, I can now go and type this in and basically say 2,800 multiplied by 29.7. Does that get to the same thing? So I'll just use a little formula, star, that gets me to 587.16. And then to say 4 containers of 704.87 gives me, and there I can actually just copy the formula across. So that gives me 2859.48. And then the VAT will also be 4 of them, 107.23 cents. And that gives me the VAT, 428 Rand. And then what is the total of those two? I just use my sum. So normally my sum will be quite easily found. The VAT gives me, the total sum total is 62,004. The subtotal excluding the VAT, well, that's obviously just the first two. And if I look here at the bottom, that's 61575. I know it must be very small on your screen, but you can still see at least where that comes from, right? Good. So that's basically doing all the recalculations. So we are happy that there are no mistakes on the calculations of the invoicing. So I'm just going to delete my stuff there. So what is the amount excluding VAT? Well, we said 61575 and 48. What was the VAT? 428.92. The amount including VAT, 62,004.40. And then does that tie up? Yes, it ties up. That is our formula that says, well, take the, oh, sorry, that one is already working to another one. But we can even do a formula here to say, let's summarize those two, and then we'll get to the same value per the invoice. All right. Then the work. So we've got the look at the information. Step 6 then says cost and calculations of the GL accounts. Have you checked the costing and the calculations of the general ledger account that this one came from? Which was the general ledger account for this invoice? If we just go a little bit more to the left, the account name was motor vehicle, petrol, and oil. So this tells us we have to actually go to that general ledger account and go and check that. So let's go and open the GL account. Just before I said we're not going to go there, but we didn't go and do the whole recon. So there's the manufacturing general ledger accounts, the operating expenses general ledger accounts. I'm again going to put this on the right-hand side for us so that we can just see. And now we want to go and find the motor vehicle. Oh my goodness, it's because I'm typing the wrong letters. There is motor vehicle for us. So this is the account that we want to cost. Motor vehicle, petrol, and oil. Just going to highlight that for me, then I know where to stop or what to do. Maybe just another thing to show you is that we've got the debits, credits, and then we also have the cumulative balance. Right. So what do we want to do? We want to make sure that the total of the general ledger costs. So basically, I want to make sure that if there's 217 and nothing in the credit, that it gets done correctly. But now when we've got those two and then a credit of 24, that the 2131 is correct. Ultimately all the way to the bottom, so that where we then have, I'm just highlighting this again, where we then have a total for that account, closing balance for motor vehicles, the oil, so the next account is repairs and maintenance, that total of 407,250 is correct. So, well, I can see now the Excel says 407,000. But we also need to check that. So I'm not just going to go here because, again, there's no formulas in these columns, in the cumulative column. So I could, if I wanted to, go and recalculate every single line item, okay, to say that plus the previous line item is that. Oh, now it doesn't want to even work. Okay? Why is that the case? I'll need to check. Those are values, so those are not numbers. Sure now why it won't work, but that's not the way I want to do it anyway. So the way I want to suggest that we do it is actually just to do a sum function here at the bottom. Editing sum, not just from the those ones that are picked up, but actually the total balance. And I will draw that one across. So now I'm going to have 421 minus the 21,000. And if I now say 428 minus the 21,000, that's 407,250. Does that agree to what we have in the GL total? Yes, that agree. And that then gives us the point where we can actually then type or put the evidence to say, yes, the costing and the calculations of the general ledger works. Let me just quickly check. I see there's a question. Okay, so I see Hamza. Yes, that is exactly correct. At the start of the session, I did give you the link as well. Otherwise, you can even just scroll up to the very, very start. This is the Caseware file that we are using in the e-learning. So if you've done the e-learning already, you will see that Caseware file there. Let me just quickly, for the sake to make sure there's no uncertainty there, There might be others who also joined late. So this is the success community. And then when we go to audit level 1, you will see that there you have the engagement file. So whether you're using Probe or Audit International, that's the file that has all of these supporting documents that we are using in the session today, and that's also used on the e-learning, as well as your caseware file. So whether you're using Probe or Audit International, you'll have your working papers, your everything that's ready there for your work program. For today's session, session 203, that resources that you're seeing there is the slides. Okay, so of course you can also download the slides, but all of these documents that we are using today, the Excels, the caseware working paper, the client supporting documents, that's all included in these two files at the top, which if we go to the very, very top, the header there is e-learning files. Okay, so that's all there, Hamza, so you can just go and download that. But that you might have already used also as part of your completing the work before. All right. So let's carry on then with the information. So costing calculations, that's all then. Details of the supporting documentation agreed. Did we agree the information? Yes, of course. We actually had it open there. We agreed the information. So we can definitely say we agreed that. Is the source document, the invoice, mathematically correct? Well, you saw just now how we calculated them here, just in the bottom of the Excel, just quickly and easily. I'm almost want to say very lazy in that regard. Not that it's probably lazy, but I like to just quickly do a recalculation in Excel rather than necessarily using the calculation that pops up on the computer. Because if I make a mistake on the calculator that pops up, then sometimes it's a bit of a mission to go fix it. But if I do it in Excel, I can see it. And then sometimes I forget to take it out. So that's just the secret, that you must not also make that mistake. Are there expenses which should have been capitalized? Well, diesel and oil are things that you use as part of your consumables. So in manufacturing, we use that maybe to run some of our machines, the diesel for the generator, the oil, maybe for the vehicles that do the deliveries, things like that. So these are consumables, and therefore I'm comfortable that this should not have been capitalized. And so therefore this is not applicable. That we didn't come across any mistakes, any problems, anything indicating that actually these expenses should have been capitalized. Okay, so it's not applicable. Is the classification correct? This is oil and diesel. Is it correct as motor vehicle expense? Yes, that is correct. And then step 7 says, is the VAT treated correctly? We've considered that, right? We said diesel, no VAT, oil has VAT. The client did not actually account for that in terms of the accounting rules. They didn't include that as part of the cost. They took the VAT out. How do we know that? Let's go and see. That 60. Let's go and hang on. I want to go and actually check the GL, not just talk up in the air. So if we go to the invoice, which was, there we go, 61,575. So they correctly, therefore, treated the VAT as claimable because it is a consumable. It is VAT on that oil. So the only expense that's reflected in the client's general ledger as an expense is the 61,000, which is correct. Right, so that's why we can go and say, yes, the client did correctly claim the input VAT. They were allowed to, and they did do that. And then, is the VAT correctly treated or correctly accounted for in the accounting records? Now, we can see that, yeah, we could also, I didn't include that for you today, but you could also go and check in the VAT control account to see if it is included on that side. Right, but we don't necessarily have to go that far, but we can already see that they did not claim the VAT with this expense. And so we are comfortable that they've treated it correctly. And that is then the audit work required for operating expenses. Right. Good. Quick, short and sweet one there. We can close these documents then if you have them open. I see I still have the bank reconciliation open from before. So let's just close all of those, and then we will go back to save everything we needed to, and then we will go back to our slides, because the next thing we're going to do is we are going to go and audit the employee cost. Now, employee cost, yes, it's part of the operating expenses. And in auditing employee cost, I said earlier on already, the client accounts for employee cost in a totally separate system. Very often, because payroll is a bit of a tricky thing. You've got deductions and you've got pension fund that needs to be paid over, and you've got all these things. You've got to calculate the tax that you need to deduct for the client and pay over to SARS and all of that. So almost want to say the moment clients have a few employees, they often have a system to make sure that they do it correctly. You can do it in Excel, you can calculate it yourself, but it really is quite tricky. So that's why when we are auditing employee costs, we have it as separate steps to explain exactly how we actually audit that section. Because you can imagine the audit steps to say, go and select a few payments to employees, a few invoices, and go and check that it was treated correctly and that the VAT was accounted for correctly. I mean, that just those words does not make sense in the context of employee cost. So if I had a few employee cost payments on that general expenses working paper that we had just now, I would actually be stuck. I wouldn't know how to audit it. So that's why we separate employee cost when we go and do the field work, when we go and audit, and we therefore then audit all of that information that's on the other system separately. Now, in the e-learning, one of the first things we did completely extensively and took a lot of time, but we did actually reconcile it at the end, was to reconcile the information in the client's accounting records. So the client's system, payroll system, the report that came from there, we reconciled all of that to what was in the client's general ledger. So that when we go and work with those reports that show us the detail for each of the employees and the deductions and all of those things, we know we are working with the correct information because we know what has been included in there. We know that is, the way I like to think about it is almost a more user-friendly way or version of what has been recorded in the general ledger, which are basically just a few journal entries. So we can't really determine what's made up, what is included in each of those journal entries. It is just so much easier to go and audit the detail in the payroll system. Right. Now, I mentioned that employee cost is part of operating expenses, but also remember, in the case of a wrap-up, for example, we didn't just have employee costs as part of operating expenses. It's not just the office staff and maybe the sales guys and the financial manager. It's not just them that earn salaries in wrap-up. There are factory workers. So in other words, people who earn salaries, employees, who earn employee cost salaries in the manufacturing process. And where do their expenses go? The expense for that employee or employees does not go to operating expenses under the admin line. It actually goes as part of the cost of inventory. And so ultimately, some is recorded in the inventory line item, the balance sheet item, and then some of it is, of course, expensed as cost of sales. So there are multiple places where the employee cost is accounted for. So we'll take all of those together, and then we go and audit them from this payroll system. All right, let's just have a look again at where did the transactions come from. So we've spoken already about the fact that the client uses a payroll system, and the payroll system is supported, or almost want to say informed by, an employee contract, statutory obligations. If the clients belong to now I've forgotten what the word is, trade unions, that's the word. If the clients belong to trade unions, in our case, they actually belong to a bargaining council who prescribe certain deductions, like a pension fund or a medical aid or whatever the case is. So all of those things actually drive what gets deducted in the payroll system. And of course, all of that gets driven by the fact that we have employees employed in the business. Good. So that's your expenses then, or your employee cost expenses for us then. Again, just reminding, we're checking that the client is accounting for these items correctly in terms of the framework. Good. Now we're going to go back to our caseware file, and yes, we are still in operating expenses because that's where our working papers are for employee costs. And you can see we've done the employee cost reconciliation already. That's all there. The employee cost detail testing is where I want us to focus our attention today. So we are going to go and have a look then at, let's just open this, see what we included, what we selected. Right, so for today, we have the employee cost document. Oh, I see, I forgot to complete these, but okay, let me quickly complete them just so that you can see that they are correct. So again, the working paper, that's what I wanted, yeah. The working paper, everything is there. The population is made up by, let me make this slightly bigger so you can clearly see. Our population for employee cost is made up of costs in the cost of sales, okay, the manufacturing guys, and employee cost in the operating expenses. So those two together gives us the 17 million. And that is the value that we are working with when we are auditing the employee costs. So we are auditing employee costs or salaries and expenses and wages of 17 million, but you're not going to go find that in one place in the file, that or in the client's trial balance. That is made up between a number of accounts in operating expenses and a number of accounts in cost of sales. Right, in selecting employees, we had a sample size of 4. They were selected haphazardly. We selected 1 salaried employee and 3 waged employees. Good. Again, there at the top, you can see we tested or we documented how we ensured that the documents or the information prepared by the client is in fact accurate and complete. Good. So now we have the information that we've extracted from the client's detailed payroll report. So here are those 4 employees. I'm guessing if I look at it like this, that Brett Gorge is probably our full-time employee because he didn't get night shift or overtime or anything. He just earns a salary. And then these 3 guys, Patrick Mbazu, Philip Sitoli, and Chris Just. They are then probably the 3 wage earners. So again, in the recording, we looked and we audited the Brett Gorge salary as well as Patrick Mbazu. So let's just see what is included here. Here, firstly, we are documenting, again, from the detailed payroll system, we are documenting what they earned in specific months in the sample. Then we have the company contributions. Now, as a reminder again, company contributions are things that the client, the business, expenses that they incur over and above the salary or the gross salary of the business. So you might know the word cost to company. So the fact that I've got a person employed on their salary, on their contract or something like that, it will say this is your salary. This is what your gross salary is. But actually, when I take that into account as well as all of the company contributions, your total cost to company may be more. Right, of course, as we know, you don't get that value necessarily in your bank account because we then also have deductions. Right, so that's from the payroll report. What we're going to do just now is we're also going to go and see some of the audit work that had to be done. Now we can see here, sorry, I see that I've done this incorrectly. The team has already done the work of checking the signed contract, checking the physical verification, all of that stuff that they've already done. They've checked it to the agreed increase letter and so forth. So that's all fine and done for us. We just need to check the costing and cross-costing of the report itself. That will do. But from 2A and then the rest, the team has already done for us. Then next up, we have the deductions that's been done again from the payroll report still. So the first line was the income. Now we've got the deductions on the payroll report, and we need to check that these are correctly recorded for specifically for Philip Sitoli, and then also the tax, or that the tax was deduction correctly. So we're going to test that. Then other deductions is the payroll and the skills development levy. And that's that. Okay. Reminder again, we will get to the tax tables later on, but just a big important reminder that we need to bear in mind is that the case study that we prepared for you is the case study for the financial period ended April 2023. And for the tax calculation for the employee tax, we used a table that is really just a case study table. So I almost want to just say, please, when you are auditing on a client, use the client's current tax table. So you could get them from the SARS site. So let's say, for example, you're auditing a client that has a financial period ended February 2026, then you'll go look at the 2026 tax tables. Or if you are using a client from a bit later back in history, then you'll go and get the latest ones there. So again, as I've said, from the SARS site, there are tax tables there. You might also have that your firm maybe has nice working papers to calculate the tax, or to at least have the tax table on there. But also just check that you are using the correct tax table for the correct period. So again, if your firm has a template, and their template's been updated to the 2026 tax table, for example, because we are now auditing the February 2026 year ends maybe. Make sure that you're not auditing a client that was maybe working or where the staff were earning salaries in the 2025 tax year, perhaps, right? So they would have had different taxes deducted, perhaps. Although, if I remember correctly, we didn't have changes to the tax table between the 25 and 26 tax tables, but the 24 tax tables and 3, they were different. So make sure that when you are calculating the deductible taxes for payroll, that you are using the right tables. Good. So let's go and audit, do the work then for Philip Sitoli. Right, so the principle is that we are going to go and check that the right information was used for the what is the word I'm looking for now? For the income recorded in the payroll system. Let's go and see what we have as supporting documents. So I just need to move to the employee cost folder. There we have the bargaining council contribution. So we don't have the income earned. I think that might actually, or there we've got the log hours that we've got. Therefore, we are working with Philip Sitoli. So for Philip Sitoli, if we just increase it slightly, there we can see that his normal hours is 160. His overtime hours was 91, 20 hours, and so forth. So we could, if I just split my screen again, we could go and recalculate and check that these values are in fact correctly done. So the night shift income, night shift, there we've got Philip Sitoli, 15 hours, right? 15 hours at his rate. Is that correct? We can calculate that. I'm just going to quickly 15.65 multiplied by his rates. That is now not 100%. Am I using the, let me just quickly check. I'm using Philip Sitoli. Just want to check why I'm not getting that. All right, let's check his normal hours first, because I'm now getting confused. You know how it goes. Then you start to panic. All right, so his normal hours are right. Let me just change the color there. That is from his normal hours of 160. His rate has been agreed, so we know that's right. Okay. Overtime, the overtime 1.5. So that's the first one when he earns 1.5 times. I see the report is a little bit short, but there we could also recalculate and say the hours that he worked for that month was 91.95. And if we again calculate it by multiplying it by his rate, that's once, but we need to do it by 1.5, because if he works overtime, he needs to actually earn 1.5 times the money. So it's slightly out. And then if we go and we calculate the hours of overtime 2, so Philip Sitoli, the double pay was 20.4. Apologies. Multiplied by the rate, and that's twice the rate. Does it come to the right number of hours? Yes, it does. Right, so we know that the overtime hours is correct. We have a slight difference here, and that one, for some reason, I couldn't get to the right number, but I'm also wondering if the night shift wasn't 1.5 times or something like that. Just gonna night shift. He was the only one that worked night shift. You know what? I'm going to reverse engineer this and say if he earned 1099, and I divide that by 61, what am I getting? And that's 18 hours. And so we can clearly see he obviously got more hours than he should have gotten paid for. So actually there is a slight difference here between the night shift hours and the overtime hours. There is a small difference. I don't want us to focus on that too much now. What we would definitely need to go and follow up on that and see where the error is, because it's literally going to be a 50 Rand here and 100 Rand there or something. I don't want us to worry about it now. You would have to go and calculate it and check and see why did that go wrong. If we use the wrong formula, if we use the wrong report, anything like that, it could mean that all your other employees are going to be wrong. Okay, but I don't want us to go down that rabbit hole now. The principle that we have here is that we recalculate using the hours logged from the report, and we use the rate that was confirmed, and we recalculate those, and then we can indicate that we have cross-costed. Okay. Good. I'm keeping those other two in yellow because we know we've got a bit of a problem there. All right. Then in terms of the company contributions, for those, we are going to go and look again at our supporting documents. What do we have available? We had in another one, we had the bargaining council contributions, and here, teeny tiny document, we've redacted the information for you to just what you really need. And for Philip here, we had, he belongs to the bargaining council, and so for Philip, we had calculated there that his deductions, admin levy, that is R6.88, so we know that's correct. The dispute levy, is there a dispute levy for him here? Yes, there we've got R2.48, so we know that must be there. Then, and this is the employee deduction, sorry, even the employer, also the company contributions, that's the ones that we will have there. Okay, so let me show you those. Okay. Provident Fund, there's no Provident Fund deduction for Philip Sitoli. Technology contribution, that's only for the employer, R1.69. We've got the R1.69. And then union fees is the employee cost, 97. So we'll look at that a little bit later on. UIF is not a bargaining council thing. UIF is, of course, unemployment insurance fund. And that, as you may remember, is 1% of an employee's salary up to a maximum of, and for 2013, that was a maximum of 177. So it basically came down to saying 1% of a salary up to a maximum of 17,712 Rand. That got us to the 177. So if you earn more than 17,000, your maximum UIF contribution is 177, and that is 1% for the employee to contribute, but we're looking at company contributions, 1% also for the employer. Right. The skills development levy is an employer contribution, company contribution, and those are also 1%. But here, of course, we are working with Philip Sitoli, which is that third last one. That is 1% of his salary. So there you can see 21,797, and that is 21,7, probably 97 and a few extra half a cents. So that then got to 217 Rand and 98 cents. So the total contributions then, this is a formula, so we can check that it works correctly, is then 406 Rand, and that is correctly calculated. And we can say cross cost. So the total cost to company, that means the total contributions plus the total gross salary for Philip Sitoli. So let's check that formula. Oh my goodness. I'm actually going to make it a little bit bigger for us now because I move my Teams things also away because they seem to be in the way for us. So there we can see again the formula. Total company contributions, 406 Rand, plus the total gross salary, 21,000. Right, so that's 22,204 Rand. That obviously is correctly calculated. Good. So now we can sign off in column U. We can say, yes, the client has correctly, or the client's report costs and cross costs correctly. We have also agreed all of those deductions from the company's contributions to the bargaining council statement. So we've obtained that evidence. Okay. Next, we are going to calculate the deductions that is the employee's responsibility. So employee deductions, again, for Philip Sitoli. So let's go back to the bargaining council. Bargaining council has employee. So there we have an admin levy. Let me just get to the right one. So that's then the first column for admin levy employee, R6.88. Dispute resolution levy, R2.48. So dispute resolution, R2.48. That union fees, remember the union fees earlier on? We don't have a provident fund. the technology is paid by the client. So then we have the employees incurring the fee, or employee in this case, incurring the fee of $97.76. So that's correctly done there, $97.76. And that is also correct there. UIF, you could go up to the report and say, is that the same as what we have there? But we also know it's 17,000 Rand, 712 Rand, so that is 1%. And then we need to calculate the PAYE, which we're going to do next. And then once we know that PAYE is correct, then we will be done with that. Okay, so let's go to the PAYE in the next line. Philip earned 21,000 Rand gross, so he will be taxed on the 21,000 Rand, not on the company contributions. And so now we need to calculate what would be the tax that the system would have deducted for him from that salary for this 1 month. Now remember, on a payroll system, they will always assume that you are going to earn for the whole year. So they will always calculate the tax. Let me maybe word that better. That when calculating the tax, it will always assume that you're earning that salary for the remainder of the financial year or the tax year. So even if you are only earning for the first 3 or just 3 of the 12 months or anything like that, then you will always, when you are earning that salary, it will calculate the tax as if you are earning that for the full year. Okay. So that's why when we get to calculate the taxable income, we need to first actually annualize it, make it the tax for the year. And that's, if it's 1 month, we obviously need to multiply it by 12. So you take that 1 month and you multiply it by 12. That then gives us the taxable income for the year. Now we need to go and find or calculate what the tax would be. So 261,000 Rand would be the taxable income, and the tax that's calculated on that according to the tax scales is where we would go and say 216,000 is that second line in the tax table. So he's going to earn something in this area. Actually, just want to highlight this for us so that we know where to go to. Something between 216,000 and 337,000. On that portion, he is going to earn or pay 26%. But, and this is how the table works, the first 216,200 Rand would have been taxed at 18%. And 18%, if I've taken also the rebates and whatever into account, well, after I'll take the rebates into account, but on the first 216,000, the 18% would be 38,000. So what we're going to do is we're going to say, well, on the first 216,000 Rand that you earned, you would have to pay 38,916 Rand. Then we are going to calculate what is the difference between your salary, 261 Rand, 575 and 28 cents, and the first 216,000. So we're going to say, well, take then your total salary for the year, total taxable, minus that threshold that we had in the beginning. So that then tells us now how much you would have that needs to be calculated at 26%. So I'm going to just let that formula just hang there for a moment so that you can see how I'm doing that. So I'm saying the first bit of tax that you have to pay is the 38,000 Rand on the first 216,000. Then I calculate that D59 to B67. I calculate what is the difference between your total taxable income and, apologies, let me start that sentence from scratch. Then I will take the difference or calculate the difference between your total taxable income and the 216,000, which was the first line that you've already been taxed on to get that 38,000. So that's the difference then that you will be in that second line of the tax table. So we'll calculate that difference. We don't see the answer now, but that difference is then also multiplied by 26% that we've got there as D68. So it's 38,000 plus 26% on the difference between 216,000 and your salary. Okay. That tells us that if this was an annual salary, you would have had to pay 50,000 Rand tax on that annual salary. But because all our employees are less than 65 years old or younger than 65 years, because that's the case, they get a deduction or a primary rebate. And the primary rebate is the 15,000. So the first 15,000 of that 38,000, no one has to pay ever. And so therefore, because we've already got a lovely formula in there, the total tax that you would have had to pay is the difference between the 50 and the 15. So what's that? Basically 35,000, just about 35,000. Divide that by 12, and that gives you 2,916 and 63 cents per month. We've calculated that. What did the client deduct from the payroll system? Well, we can see that I calculated 2,937 and 57 cents. Okay, what's the difference there? We can see that they then actually deducted, their system calculated 20 Rand more tax. It's not that much, actually, if you think how close it actually is in the total scheme sense. And because you could have earned more overtime in some months, less overtime in other months, and this system is continuously analyzing the payroll, I've almost never, I can't think now if I can say I've never, but let's say I've almost never seen that the payroll gets calculated exactly, precisely when we get to the PAYE, the tax to be deducted for wage employees who earn overtime and all kinds of other allowances for working overtime. So that's why we are comfortable that this has been costed closely enough, right? What is the UIF that is on the payroll system? There's the UIF, so we can probably even just link it to say the UIF is there. According to us as auditors, what should the UIF be? Now, you could also just have said you've recalculated or whatever it is, but you can literally just type in 1170212, and then we can see they've done it correctly. The difference is 0. What is the skills development levy per the payroll? So what did they deduct for him for skills development levy? Remember, skills development levy is the employer contribution. So the skills development levy was 217 Rand. And again, because we are literally calculating it with a formula, I could almost just pull down that formula there and say, well, it should be 217.98 cents. And that is exactly the same as what was deducted from or paid on his behalf or recorded in the payroll system. So what we are seeing here is, okay, we'll have to investigate those two and see why is there a difference there in his pay between the night shift and the overtime 1.5. That's one thing for us to figure out. But other than that, his payroll tax was calculated very closely. And all the other deductions and everything made was done correctly. Oh, the one thing that we would need to go and do still is 2G, where we are just ticking and saying, yes, the calculations were done correctly. What was still outstanding before we got to that was the PAYE that we still had to recalculate here at the bottom. So in fact, if you want to now have almost want to say a pretty file, we can now basically just remove all of the highlights for Philip Sitoli. Oh, what did I do now? If you wanted to see, okay, what have we done? So those two I might still leave there. A little bit of a uncertainty there. If you want, goodness, I need to go and find that out from the client. But other than that, we have checked, we have calculated, and we can then actually conclude on the objective, conclude on the working paper and say, having done that massive task where we reconciled the payroll system to the client's records, the GL, having now tested 4 of the employees, if I have a concern and I see actually this is a problem, we're not happy with that, then I could always go back and say, well, let's go and test some more. In fact, I think we've got the hours for Chris as well. So let's go and see. We've got some time still. Let's go and check for Chris if these hours were correctly used, because that could also then give us an indication if there is a bigger problem. Yeah. Okay, so this is the bargaining council. I want to go to the hours logged. Let's use that hours logged one. Chris is just here at the bottom. Just Chris. That's, of course, with his surname first and then his name. So normal hours for him, again, that was, goodness, let me split it like that. Then we know it's good. If these two are exactly split, then I can actually just, normally I can move it like that. Today it doesn't want to move like that. And then you can actually resize them as you need to. Okay, so for just Chris, we've got 18,000 that was paid according to the payroll records. If I now take the hours, he's got 160 hours, and I multiply that by his rate, which is 116 Rand, I can see that that is also not a perfect calculation, 18,696, so also not perfect. Then in terms of overtime, look at this one. So he's only worked 1 hour overtime. Do you see that here? Okay, just 1 hour overtime. But he has worked, and this is 1.5 times overtime. That column should be 1.5. So he's worked 1 hour at the rate of his normal rate times 1.5. And so what he should have earned then as overtime is 175. Now, the interesting thing is, I wonder if these two are going to be the same as what he ended up earning. Not perfectly. So the two there together is 18,861, but I've selected my calculations and I see that the total of what he should have earned was 18,871. So there are these slight differences in the calculations, and if you are auditing this on a real client, you'd actually go and say, guys, something's wrong here, something's missing. So, of course, he didn't have any night shift hours, he didn't have any overtime hours. So those ones I can make white. Those are fine. Even put a 0 if I want to have a little line there to say exactly. But for some of these hours from the logs, we'd need to go and check that just to see why is there a difference. All right, I'm not going to necessarily go and recalculate all the other stuff. You can see the admin and the dispute and those things. They're all quite simple, quite the same. Also, Chris does not belong. Oh, he does belong. He does belong to the bargaining council, and his deductions are all there as well. Dispute resolution, all of those are all the same. He's got no funnies, and he doesn't have an employee union fee. Interesting enough that he didn't have to pay a union fee, but the other guys did. But that is according to the system. All right. So we can then, I'm going to close the, not save, and close the supporting documents. The highlights are wanting to save, but I don't need to save them in there. And that is our working paper for payroll. Right. Maybe just one question that I often get with regards to payroll and specifically with skills development levy. So sometimes people wonder, but who has to pay UIF and who has to pay skills development levy? So if you employ a person, any employee, even if you've just got one employee, you have to pay UIF. However, if you have employees and your total payroll for the whole year is less than 500,000 Rand, then you don't have to register for skills development levy and therefore don't have to pay the SDL. Now, 500,000 Rand, if you think about that, that's less than 50,000 Rand a year that you're going to pay in salaries. So chances are that if you've got I almost want to say 3 employees or so, you probably, maybe even with 2 employees, you might already be over that, depending on what the skills level of your employees are. So the moment the business or the employer's total payroll for the year will be more than 500,000 Rand, they have to register for skills development levy and then pay over that 1% to the CETAs or to the as part of your employment taxes as well. Right, that is then the last exercise or the last topic, the employee costs, and then of course the topic of the exercise that went with that. All right, so then what's next? What can we expect, or what are we doing next in audit level 1, doing or performing the fieldwork? So yes, next week, you are seeing that correctly. In a week's time, we will have our last session, performing fieldwork session 3. And the topics that we will work through there is going to include the e-learning that dealt with auditing journal entries. That is a really important one. Auditing related parties and this disclosure of related parties, auditing other income. And then we also have a session about substantive and control testing worksheets, where we will just revise what's done in the e-learning. But again, the e-learning has complete modules there to discuss how to audit the journals, the related parties, the other income, as well as substantive and control testing worksheets. Right, so that's for next Friday. Again, I just want to say same time, same place. So again, it will be 9 o'clock next Friday. And then you would probably have received your link already, but that's then also for next Friday. All right. Yeah, I don't see any other questions, but we have a lot of time still. So if anyone has any other questions, please feel free to submit those. But other than that, I want to thank you for your attendance. Thank you for the questions that did come through. Thank you for everyone that has done the work on the e-learning already. If you haven't done the work on the e-learning yet, please, I want to encourage you to go and do that work on the e-learning, because that you see, we only really touch on a few points, a little bit here and there, and the bulk of the learning really is in the e-learning. So for those of you that we will what did I want to say now? For those of you that haven't completed the work or the material yet, please go and do that. But if you haven't done the material for today's session yet, we only have 7 days. So I would say prioritize the work, the material for next week, Friday. Go do that module. Nothing's going to stop you from doing that, shouldn't. Do the module 3 work. Get ready for next Friday so that you can fully participate in next week, Friday stuff. And then you can always catch up the other things. Okay, I see a few questions coming through. Thank you so much. But at the same time, please will you go and either follow the link that I've shared to an office form. So just a form of post-course survey that I want you to please just give us some feedback on today's session. Or I'm also sharing the QR code on the screen, so you can also use that to please fill in the form to give us some feedback. All right, so that's that from me. I'm going to answer the questions now, but if you need to go, thank you very much. And please complete the survey. We want to see how we can help you even more, even better. When will the recording from the 20th of February be uploaded? I will follow up on that today, because I see that some of the recordings are already there. So that might actually already be there. You could also, if you wanted to go and check on YouTube, but I don't want to now go and look. Oh, I see there. Oh, that's the e-learning. Thank you, Nonko, for sharing that. So the recording from the 20th of February might already be on YouTube. I just don't know why it's not on the Success Community, but that's there. And then also for the, maybe if I just show you also on the, that one's not checking the link. So on the Success Community, right at the top, also under GetAhead, you will see there a question to say, where is it now? The e-learning courses. That's probably the link where that one went to. And so from the Success Community, remember the purpose is to have everything on the Success Community. So from the Success Community, you have those courses, GetAhead Audit Level 1. When you click on that, it will take you to the e-learning site where you can then, if you've not been enrolled yet, you can enroll yourself. And remember, if you see that your username is there, but you can't remember what your password is, you can always just put in lost password and then put in your email address, and it will send you how to reset your password. So you don't have to wait for a link to come to you. You can almost want to say, go find your own login. So from the Success Community, click on, what did I say now? Sorry, guys. E-learning courses. So go on that link for e-learning courses. That will open up the extra page for the e-learning courses, where you will click on your section or on your course, Audit Level 1, and that will take you to the course. And you can, if you're not sure what your login is, you can always just reset your password by selecting lost password. That's the wording there, yes. Right. All right, I'm going to still be around for another 5 minutes or so in case there are any questions, but otherwise I am looking forward to seeing you again next week. Have a lovely Friday.